Now, Donald Trump has announced a series of tax reforms that he intends to pursue if reelected. And his proposals aim to adjust the tax landscape for various groups, particularly middle class workers, corporations, and for foreign imports. So, in this video, I'll go over Trump's tax plans in three main sections: the changes for middle class earners, tax proposals for corporations, and the adjustments regarding foreign imports. And the goal here is to provide a clear understanding of these proposed changes without delving too much into political debates, although you're free to do that in the comments sections. That's just going to help my algorithm. And also, for information on Kamala Harris's tax plan, you can watch the earlier video that I made covering that. So I'll leave a link of that in the description. One of the very significant elements of Trump's tax plan involves extending the Tax Cuts and Jobs Act, enacted during his presidency back in 2017. And this Tax Cuts and Jobs Act reduced tax rates across various income brackets. So many people actually had lower taxes as a result. If he's really reelected, what his proposal is that there will be no changes to the current tax brackets, which I'm showing here on the screen, but a link to the full table that shows more than just the income bracket for single people can also be found. So I'm going to add that link to the description. And just to go over this fairly quickly, you see at the lowest income, you'll have a 10% federal tax rate, goes up to 12%, 22%, then 24%, 32%, 35%, and then lastly 37% the highest income bracket. And you can feel free to pause here if you need more time, or again just visit that link after this video. And as a final note, if you've watched my video covering Kamala Harris's tax plan, then you may also be aware that the Tax Cuts and Jobs Act is currently set to expire in 2025, so just next year. And if expired, then taxes will increase for most of these income brackets. For standard deductions, there are some discussions right now about increasing the standard deductions for when you're filing your taxes. So this is going to allow taxpayers to reduce their taxable income. If the Tax Cuts and Jobs Act expires, then the standard deduction for a married couple, and I'm using married as just an example, would be $16,525. If that act were to be extended, then the standard deduction for that same married couple would be $30,725. Another noteworthy proposal is the elimination of taxes on tips for employees in service industries, such as bartenders, waitstaff, and currently, tips are considered taxable income, which can actually significantly impact those whose earnings are primarily derived from gratuities. By eliminating this tax, Trump's aim is to provide a financial boost to those in these professions, potentially increasing their take-home pay. And I know this is a video on Donald Trump, but for a quick note, similarly, Kamala Harris is also proposing an elimination on taxes on tips, so that's at least one similarity between them. As a final noteworthy note, last in this part is going to be that Trump's campaign has also said that he's considering raising the child tax credit to $5,000 per child for families of all income levels. Trump's tax plan also includes critical changes aimed at corporations. So, under the current law, corporations face a tax rate of 21% on their profits. This rate was established through the Tax Cuts and Jobs Act and represents a significant reduction from the previous rate of 35%. And Trump's team seeks to maintain this 21% if reelected. Now, if the Tax Cuts and Jobs Act expires, the corporate tax rate could revert to 35%, which could discourage investment and growth. By keeping the rate at 21%, Trump argues that businesses will have more capital available for expansion, hiring, and wage increases, ultimately benefiting the broader economy. And for a very simple example, just to illustrate how this works, assuming that a company has profits before taxes of $1 million, if the tax rate is 21%, then that's a reduction of $210,000. So in profits after taxes, they'll have $790,000. If the tax rate was 35%, then that's a reduction of $350,000, meaning after taxes, their profit will be $650,000. And a final note on this, just as something good to know, corporate taxation works on double taxation. This means that profits that the corporation has are taxed at the corporate tax rate, so 21% right now, but then the owners are also subject to a second tax based on their own individual tax rates. With that being said, this brings us to the last part of this video, which is about taxation on foreign imports. And I call it tax, but it's tariffs on foreign imports. So lastly, Trump's plan includes a focus on foreign trade, where he's proposing a 60% tariff on goods from China, and for all other countries, it could range from 10 to 20% on any US import. And the rationale behind this is to encourage consumers to buy domestically produced items, therefore supporting American businesses and jobs. Trump believes this will create more factory jobs, help shrink the federal deficit, and lower food prices, and allow the government to subsidize childcare. Some of the economic things that could be affected in this would be that the proposed tariffs could place additional costs on foreign products, which could make US products more competitive in terms of pricing. While this could benefit American manufacturers, it may also lead to higher prices for consumers on imported goods. The overall impact on the economy would depend on how businesses and consumers adapt to these changes. And it could raise questions about potential trade tensions, since those countries may also respond in kind with their own tariffs, which can increase domestic inflation and can affect the global economy as a whole in addition to the domestic US economy. So in conclusion, that was a pretty quick overview of Donald Trump's 2025 tax plans if reelected. So in summary, the proposed tax reforms is to extend the Tax Cuts and Jobs Act, which will keep our current tax rates at the current levels, and also to maintain that corporate tax rate of 21%, and lastly, imposing tariffs or taxes on foreign imports. Now that's about all I have to say for this video. Please let me know what you think about these reforms in the comments below, and make sure to hit the like button, please subscribe, and thank you so much for watching.